This conference will now be recorded.
What is up, everyone? My audience, I want to introduce you guys to the man, the myth, the legend, Mr. PeteDoom
Hey everybody,
himself. We've been
Matt.
wanting to do this for a while now, get a little one-on-one style. I don't know, what do you want to call this, Pete? Like a podcast style, interview
Yeah,
style, just
it's a
hanging out with the,
podcast.
yeah, just
Just
hanging out
hang
with the
out,
boys.
man. I mean, like, it's kind of funny because you and I have been chatting forever now.
A long
Since you were Jeff Knows on Twitter.
time.
And now you're Matt Knows, and it was awesome. I just remember that day that you changed your Twitter name to you.
You
And
actually remember that? That's
it
hilarious.
was like, all right, now he's like about to just kick some serious rear end.
That was the metaphorical transformation for me. That was the big phase shift. I don't know, honestly, there was just one day where I was like, if I want to get to a point where I'm seen as like a professional profile and people could actually respect me, highly respect, I want to do a picture of me and like my name and like, make it more personable. So I
Yeah.
switched Jeff Spicoli to Matt Knows, and the new profile was born. That's
I
funny that
know.
you remember that day.
Oh, of course I remember that. And it's so legit. It's like, it's what, I mean, I'm not hating on anyone with like a pseudonym or whatever, not even a pseudonym, but just like no identity on there. But
Yeah.
like, when you see people who are, okay, this is the actual human, this is who it is, like, I don't know, it just adds like
It
another
makes it
layer of like,
personable.
dude's legit.
Yeah, it makes it more personal, 100%. I think that's a big thing for me. It's always been like, what's the word I'm looking for? Transparent,
Yeah,
right? Like if you're behind an alias or something, it's a little more difficult to get that same level of transparency. But
for
yeah,
sure.
I mean,
And there
Pete's
are
been
some
doing it
great,
years.
great traders behind aliases, so I
There,
don't mean
there's a
to
lot. There's a lot. Definitely not taking anything away from those guys. But yeah, Pete's been around for years, man. We've been talking with each other for years now.
yeah.
I mean, it's been a crazy last year, and I know someone like Pete, and I know a lot of people within Trade with Traders, as I'm sure people within Pete's network of clientele. I mean, there's and just in general on Twitter, like there's a lot of new money on Twitter,
Yeah.
and I know for myself and someone like Pete that's been doing it for years now, it's like watching this process um, take place real time in front of our eyes, because most of the new money, all they know is this current market. They don't know the slow markets. They don't know what it's like to go months, weeks and months at a time where there's no A plus setups or even B setups. There could be months, right?
It's
Um,
it's crazy.
it's
Building into positions for real swing positions for several weeks, months. Like, remember those days?
Yeah, it's
I,
like now, I mean, well, I say this, but over the last several days and over the last like week or so, I've really dialed it back. But
Mhm.
like, I'll tell you, dude, like October, November, December, January, I mean, there were times where like I would have so many things on my scan pinging off that like it would be overwhelming.
It
That
was.
just an overwhelming number of good quality setups and sectors and themes, and the money flow has just been ridiculous. And I've talked about it a few times. Like it's really due to a few reasons, right? Everybody's working from home now.
Mhm.
Everybody, I mean, everybody in America who has a white collar job, all of a sudden you don't need to go inside your office anymore. You can sit at home, and what does that lead the door to? It opens the door to mess around on your computer. And what do people want to do when they're stuck at home during a pandemic and they're losing their jobs and stuff? They want to put money into the stock market. We have the
Mhm.
Federal Reserve printing trillions of dollars, low interest rates. There's so much incentive for money to be in the stock market right now. The taboo of trading is just out the window. So now everybody's a trader all of a sudden. And
Yeah,
and that's
it's
that's
great.
that's why we get stuff like this. That's why we have markets like this and environments like this.
Where you really realize that that's true is like, man, for as long as I can remember, as long as both of us have been on Twitter, you never. I've been on Facebook and I don't use it that much, but you would never see people talking about trading on Facebook. And now I
Right.
go on Facebook and people are talking about trading, and I'm like, you're on the wrong platform, A. But B, what the heck is going on over here? My Facebook is talking about trading. Like I'm
Yeah.
lost. So
Yeah.
you're spot on. It's a total different world right now. And when you talk about all the new money and new traders that have come into the market, a number of the people that I've worked with in the recent months have all said, I've started trading in March, I started trading in April. A lot of them, this is funny. This really cracks me up, Matt, because a lot of them have had this happen. They came in, they doubled, tripled, quadrupled their account. Then they gave a significant portion of it back, but then they doubled or tripled or quadrupled that again, right? And I think that's such a funny substitute from like the stories we would hear, say, 2 years back and prior, which were basically like, I came into the market, I blew up my account, I blew it up again, then I started to figure it out, and I was able to be break even for a few years, and now I'm making money. Now it's like people are like, oh, I didn't make 100% this year. Darn it.
Yeah, if you didn't make 500% last year, like what were you doing, dude?
So
No,
it's
you're
really
totally
weird.
right.
And you and I were chatting a bit before you started recording. Just we were testing the connection here and making sure everything was stable before we started the recording. And one of the things you brought up is like, and I think I've heard it time and time again, and it's true. It's I'm dialing it back, you're dialing it back. Like we're starting to see the first warning signs of this won't last forever. And you know, it's just everything's overdone. One of the things that I'm really curious, and I'm wondering if you've noticed this, but one of the people that I chat with daily pops the list up on FinViz every single day. Stocks under $1. All right, there's like 10 on the list right now. I mean, if you looked at that same list 2 months ago, there were probably 60 or 100.
Pete, it's hilarious that you mentioned that because on my Q&A last night, I actually brought that up. I was talking about that. There was a tweet. I forget who the trader was. I don't personally follow him, but someone that I followed was retweeting something, and it was
Mm-hmm.
like a series of tweets over the course of like a week. And the first tweet was something like, there's 20 tickers left under $1. And then the
Yep.
next day it was like there's like 8 tickers left under $1. And then the next day it was like there's 3. And then there was 1. And I was just thinking to myself, well, I know what my watch list is going into tomorrow.
And now we're kind of you can slowly see more creeping back under one now. We're back to 10
Yeah.
today.
No, but seriously, if that's not a sign of the times, I don't know what is. And it's funny because that's also for the first time in my trading career, so I'm sure it's the same thing for you.
Yeah.
That translated to the OTC market.
Yeah.
I don't know if you've noticed that, but over the last several weeks, and I know you're off and on with how you're trading OTC and big
Mhm.
board, small cap, stuff like that, similar to how I am.
Yep.
But over the last several weeks, it's like the money came for a lot, if not all of these sub penny, anything with decent liquidity, sub penny in the OTC market. I mean, we're talking moves from 0.001, 0.002 up to multi pennies, maybe up to a quarter, maybe up to half a dollar,
Oh my
thousands
God.
of percent.
Somebody just said to me, "Oh, look at ILUS. Like this is a stock that I remember from being 0.0013. It's 15 cents today." I'm like, I'm not touching it at 15 cents,
Right.
but that's wild.
It's ridiculous what we're seeing. That's one of the many examples of something. I mean, I could go down the list. There's scores of them, bro. Like scores
Unbelievable.
and scores.
And
And
and then take a look at like stuff like ZOM, and I mean
right.
cents to like $3. I mean, it's insane. And those have big floats. It's like
Yeah.
not like that was some low float. Like there was like 200 billion volume for a few days. Like this is crazy the amount of money coming into them.
Well, I mean, I want to go back to talk about that, but while we're on the topic of pigs, can we talk about Sundial for a second?
Oh
I
my
mean,
God.
you're talking about something that's trading in the course of billions of dollars,
Hmm.
and I mean, it finally had the move, and it was a sick move. Um, I was very confident in that move early on. I kind of minimized the trade a little bit, but I still did well on it. But part of my part of my reasoning behind not being able to hold as much was just there was something that was just weird to me about the volume. It was just I don't know. It was just bizarre.
It was
I can't
four.
quite explain it. It was like for the first time in my trading career, there was something trading in the billions of, and by the end of it, I mean, by the time it got up to when it blew off, let's see, it blew off to $4, and it traded $4 or $5 billion that day.
It's insane.
It's mind-boggling for a small cap, for a stock that was a
Meanwhile,
$dollar.
during the run-up, they go from 454 million OS to 1.5 billion. They dilute, literally, they tripled their float. And this is a company that makes $50 million a year and burns 279 million. I mean, and this money, we all know that they're not using it to expand operations or anything. And somehow these offerings just got absorbed, and higher it goes.
Just absorbed.
I mean,
and they're doing the offerings all the way up too. They can just
all the way up. And people kept pushing it. This is a new thing too, right? You and I have seen this in the past. Stock makes an unbelievable move, right? A move that we know is just too much, too fast. Then offering hits, and that stock fizzles for quite a while, right? Maybe even comes down.
The typical market.
Typical. In this market, it's like, oh, 3 days later, all these tweets, oh, offering closed, stock can go up now. And it actually does. And I'm like, this is not something that's normal. You know,
I'll take it a step further. I mean, you'll see sometimes where there's offering news and you might get an immediate pullback. And then within a few hours, it's already trapped shorts at that low point, and now it's trending back up, and then all of a sudden it's making new highs. I mean, it's
yesterday.
What's that?
PeteDoom did that yesterday.
Oh, did it?
They announced a 1.2 or $100 million offering or something. I don't know, some offering. It dips to low sixes and then it rips to 8. I'm like, what in the world is going on? The same day, you know, not even a couple days later. And I think it was the announcement that they were going to try to hire.
That's crazy. Yeah, I mean, but going back to talk about like with OTCs, I mean, one thing that I've been trying to make very clear is that the OTC market has not been this way for years. I mean, back in when I first got started trading in 2013, 2014, a little bit of 2015, there was decent liquidity. There, you know, maybe once or twice a month you'd have a nice pump on a stock that had, you know, a good backstory or something like that. But I'd say really for the most part in the last 3-4 years, the OTC really has just been dead. There's been a couple good ones from time to time, but there's far and few in between. I mean, it's been very selective. Now at the start, and it's funny also because I've thought to myself and talked with Josh and a couple of my other buddies, like, well, all this money flow in like small caps and stuff, how have they not come to OTC yet? And then literally it was like a snap of the finger, dude. Like 1 week, maybe 2, 3, 4 weeks back, all of a sudden the OTC just started going berserk. And it's crazy because just as quickly as the money goes into OTC, the money goes right back out. And now we're kind of back in that lull phase. I think, and I had a question like this on my Q&A last night. It was like, what inning do you think we're in as far as like the OTC? And my response was kind of like, as far as like this, as far as like the immediate term, the short term, I think we're in the, you know, bottom of the ninth, toward the end, right? I think for the short term, the money flow is going to die down a little bit. But like in the macro view of things, I feel like we're probably in like the first or second inning because again, it's that paradigm shift. Now there's people discovering the how lucrative OTC is and small cap and everything like that. So I'm just curious what your thoughts are too.
Yeah, you know, so couple of things just to even jump out of that. Like when we're talking about the fact that people are now discovering OTC, and I'm seeing the outrageous moves as well, and I'm playing some of them, but yeah, I think what we saw happen is just going back to the under $1 thing. I think they've cycled through just about everything, and there's nowhere else to go now.
Yeah, right.
Certain stocks need to cool off, certain sectors need to cool off. So, okay, well, OTC is where it's at now. We've seen a lot of the big boards stagnant for a few weeks or even months now, where they're just kind of just going sideways or trying to break out, but having false breakouts. That said, I could see money staying in OTC for even the rest of February and into March if something else doesn't come. I was just discussing this the other day too. We need, so we had EV forever, right? We had, and that's obviously a long-term thing, futuristic, that's where we're going. Then we had crypto heat up again. We had marijuana recently heat up again before they delayed the bill longer, right? What else did we have? Solar plays got hot. So they flowed through everything, and then it jumped into this thing where there's no definitive hot sector. And so people are like, okay, well, let's just go for stocks under $1. Let's just go for OTC. So now instead of having a general theme or a catalyst, we're just kind of cash flowing from sector to sector.
It's all over the place all of a sudden, right?
What's hot? Let's run low float bios.
No,
Here's what they do.
It's like for a while, it's very well defined. We have this sector, we have this niche within this sector. This is where the money flow is. Okay, that's going to go here this week. Okay, that changes to here the next week. And now that everything's run its course, like you're saying, now it's like, okay, the money's kind of all over the place, trying to figure itself out. And what we're left with is a couple different things. We've got massive bubbles. I mean, electric vehicles, green energy, of course, it's the future. No one's arguing that. I think you're pretty close-minded and arguably stupid if you argued that. But if you're looking at just sheer market valuation, market cap on some of these companies and how much some of these stocks have run up. I mean, look at like just a few, for example, would be like PLUG, Plug. Everybody knows Plug over the last year.
Here a bit, finally.
Yeah.
But I mean, $70+. I thought it was going to go to 100 before they did the offering. I think it probably would have if they didn't do the offering.
Maybe could have. I mean, Fuel Cell, FCEL, you're talking about a stock last December that was sub-dollar and runs up to almost $30. PLUG, you're talking about a stock that goes from $3-4 up to $70. And that's just to name, that's only naming two out of like, I mean, scores, hundreds.
No, I mean, Sun W, 50 cents to $30. You know, I mean, it was just reel it off. It was just everything. And so to that point, now they're in OTC, so they're running OTC. But what I will say is this, Matt, I think we will soon desperately need a definitive sector to hone the money back into, just 100%. Because of the way this market is. And so today with Biden talking about semiconductors, chip shortages, I like that sector. But one of the things I noticed in the semiconductor area is there aren't a ton of publicly traded companies there. And there aren't a ton with, that are reasonable traders, like 2.5 billion float. Like nobody's going to go try to move that. So, that may be a short-lived sector just because the momentum crowd won't have the interest they had in, say, the electrical component plays or the solar plays. But I still keep looking at it and thinking about this. And one of the things that I've talked about with some folks is, and this is just totally a thought that I ran into when I watched the Super Bowl. I'm curious if you thought about this too. All the people that went to the Super Bowl that were allowed to be in the stands had to take a COVID test and a rapid test when they arrived. That could be a really, really hot sector as we get into reopening. Obviously, there's a point where stadiums start letting people back in slowly, not at 100%
concert venues,
speeches, anything, right? So imagine having to go somewhere and you get your ticket and you get this rapid COVID test you have to take upon arrival. That market could be multi-billions, and that could be the key to reopening. That could last for the better part of a year, for all we know. So that's somewhere where the cash flow could really go into some of these rapid testing companies. Because, hey, look, getting a test done and waiting 3 days is great. And I know the ones are not as reliable than when you get it for 15 minutes, but it's a hell of a lot better than a temperature gun to my forehead that tells you nothing,
Yeah, those things are silly.
But it's all hypothesis right now, but I could see, we need a sector. With the way the people are trading in this market, if it keeps being erratic like this, throw a dart, eventually what I could see happening is everybody getting too spread out, the money gets too spread out, and then it almost inadvertently tanks the market because people start throwing money into different sectors. They're not all working together to move certain sectors, and then you don't get much movement. You get frustration. That's when you get people angry on Twitter, pointing fingers, all that jazz. So,
Yeah,
I mean,
that's when you start getting bids pulled and sector real pullback. Yeah. I mean, I mean, I'll be honest, that's what my general thesis is for the next month or so. I think the broad market, like the S&P or big tech, talk like QQQ or SPY.
yeah,
The charts are still super constructive on the hourly time frame, daily time frame, weekly time frame. They're a bit extended. They could use a healthy digestive period or perhaps a pullback. But it's not like they're flashing these blaring signals of, oh, market collapse, like
no,
how we were late last February. I mean, late last February, the SPY was very top heavy. It was
yeah,
very, very top heavy. I was
volatile.
identifying that chart pattern without even the thesis of COVID behind it. I was just
I
looking at the chart like, damn, like this could really fall through here.
know.
Um, and it doesn't look that way whatsoever. And
No,
if you pay any kind of attention to the news, there's really not much negative press out there. And like the worst of
no,
COVID's behind us. The peak infection rate should be behind us. We should be opening back up soon. Life should get a little bit more normal as the year
yeah.
goes on, right?
We've definitely entered a realm of in the overall indices, there's some calm is there, I've noticed.
There's more
Um,
certainty. There's less. I think, and not being political, just a new administration, something it's
yeah,
kind of like a new paradigm shift in the market almost. It's kind of
absolutely.
how
There
we're
is
going with the
calm there.
new and kind of a new phase shift, and the market's just continuing on, and there's no signals, right?
It is crazy. And I look at stocks like, like Amazon in particular. Amazon has consolidated now for what, 4 months, 3 months
It's
sideways.
it's
They
it's
had they had
right.
great earnings, and I thought off the earnings, 100% surprised it couldn't break out of its wedge. That to me is a direct indication that people are taking money out of Amazon to go buy the AMC's and the GameStops because they're like, well, this thing's not doing anything. Let me
Yeah.
see if I can liquidate this cash, go make some quick money on this garbage, and then put it back in Amazon before it moves.
I'll
That's
tell you
kind of
what
the
though, man. Now that you bring up Amazon, that thing's getting tight. That
it's
thing's.
real tight.
Yeah, I
And
remember. I remember the earnings
earnings,
report came out, and there was something about Jeff Bezos like stepping down as the CEO,
I
and I
thought it was
thought
going to
that
break.
I thought that news alone would tank the stock a couple percentage points maybe.
Yeah, I
But
thought that would make it break out just because of how much people hate him.
well, the funny thing is that, dude, Jeff Bezos was never going to do a stock split. Whoever takes over, I don't know the new guy, but their new CEO, I mean, chances are they do a stock split, like
I frankly think that's the reason it's not going higher. I think in a normal market, or not a normal market, but I just think it should be high. I think it should be a 4,000 plus stock. I think
yeah,
nobody wants to buy a $3,500 stock,
no,
and even the
especially if
option
you can buy
calls.
commercial,
Hey,
like Bitcoin. You can buy half a Bitcoin. You could buy a tenth of a Bitcoin. You can't buy, at least in America, as far as I'm concerned. Correct me if I'm wrong. You can't buy fractional shares, right?
I think there are some brokerages that allow it, but
Oh, really?
I'm not sure. I had heard some rumblings that maybe some of them were going to or do, but none of the ones that I use.
Yeah,
uh, you
yeah.
know,
No one wants to buy a $3,500 stock. What? I mean, come on, do
Here's
a
an
stock.
interesting question for you though.
Yeah.
With all the people that, I noticed that a lot of people are migrating from Robinhood, and where those users seem to be going is Webull. Okay. And one of the things I notice about Webull, and now this makes me wonder on multiple levels. Webull, I always hear from people, oh, that OTC stock you mentioned, I can't buy it on Webull. It's not there. It doesn't
Yeah,
seem to
they
have
don't,
any.
they don't have OTC trading.
It doesn't have any warrants. It doesn't have this. It doesn't have that. Oh, okay. So now where I look, I go, geez, E-Trade and Ameritrade are already, especially Ameritrade, overloaded. They're having so many server issues daily. If
Oh,
this
don't even
OTC
get me started
thing,
with that.
if this OTC thing heats up more, and we
Yeah.
have people going, all right, Webull, if you're not going to add OTC, I'm going to Ameritrade. That just means more issues for servers, which makes me
Yeah.
nervous. But I do wonder, if some of those servers, if the Weebles and the Robin Hoods do all of a sudden allow OTC trading. I mean, you were just talking about 1,500% moves. We might see like 30,000%.
Yeah, that's the floodgate. That would be the floodgates opening, because you're opening the door to so much more retail money being able to access certain industries and certain stocks at very cheap prices, and all they see is, oh, it's trading at a penny. I can grab 1 million shares for $10,000. That's all they're thinking, you know. That's the psychology that goes into it. Anyway,
shifting gears a little bit, but sticking with OTC. I remember early on, when I first, when we were first following each other, early on in those years, the initial marijuana boom, right? And I just remember you killed that. I mean, you absolutely murdered that whole entire setup, and that was primarily OTC. I mean, even at the time, CGC was like just shifting from being an OTC stock. But remember stocks like
it still was. I think it was still listed on the Canadian exchange. It was weed, WEED.TO. That was the ticker symbol. And then
or something.
What was the ticker for the US? Now I'm blanking.
I think it was, I don't remember, but I remember ACB was like ACBBF or something.
Yeah, ACB was ACBBF. What the heck was?
It wasn't CGC. It was
no, it definitely wasn't. It was that's gonna bother me. I'll think of it. It'll come to me. But yeah,
remember like OWCP? I mean,
of
like
course.
3 cents to $3 in like 4 or 5 sessions, maybe. I mean, AMMJ, these companies. That was kind of like a little bit of what we're seeing today, but like that was like a once in a blue moon thing, and then we didn't see anything like that until Bitcoin went to 20K, and we saw like
little of it smaller too, because there wasn't the same type of the accessibility, and like we're talking about, like there weren't as many people trading it, and it was still as crazy as it was.
It was wild.
Like that's remarkable.
What I'm getting at is you take that, which was like a once in a lifetime experience, it felt like, followed by crypto, the first crypto run to 20K that we traded through too, where we had tickers going from sub penny to dollars too.
That was late 2017.
Yeah, that was like, oh, okay, that happened once, then this happened 2 years later. All right, that's not going to happen again for 2 years, and when it happens, it'll last a little while. Okay, now this thing that you think is once in a blue moon has been literally going on for a full year.
I'm telling you, I've thought the same exact thing. It's like, especially since, I mean, and keep in mind, like we're talking about a market since really like last March and April, where it's seemingly every day there's opportunity.
Yeah.
But I'd say really it's been kind of like the pinch me, I'm dreaming type of scenario since like November. Yeah. I'd say for the last like 3 months, it's almost like how is this sustaining as long as it's sustained?
I don't get it, but I'll say my hypothesis is what you said. It is everybody's home, they can trade all day, and then I think this is my general idea. When we get to the end of COVID, okay, whatever the dwindle down period is, and everybody kind of goes, yay, it's over, now everything's going to be awesome and the market's going to go up, I think that's when it actually drops. And in addition to that, I think
that's kind of what I've been on board with too.
It always seems to be the opposite of what we think, right? Yeah. And then or what sounds logical, not what we think.
Yeah.
But then I think the really big scary part is what happens when they do finally pull the plug on letting the Fed hold this market up? I mean, really, what happens then? Because I don't know, but I just don't see retail and hedge funds stabilizing and keeping the market.
No, absolutely not. And like you're saying, like are those two catalysts going to line up with each other? Like, is the world going to open back up, and then all of a sudden the quantitative easing and the pouring of trillions of dollars into the market, is that just going to also simultaneously let up? Because right now, the way we're propping it up, the way we're injecting stimulus, I mean, it has a lot to do with getting the economy back going and getting a lot of money flow. So if everything's open back up and economies are operating back to normal, what they were,
Yep.
Okay, all of a sudden, Federal Reserve, oh, we could take our foot off the printing machine, or like.
And then think about this, Matt. The flip side, like just there's a lot of little intricacies in here. Okay, so as that occurs, what happens to interest rates, right? They start
Well,
to
they should go back up.
they go back up, right? So people look at that. They look at it as, oh crap, that's like I don't want to get a mortgage now. All right, that might slow the mortgage department down. But flip side, why do people have money in the market right now? Interest rates and
There's
banks
no
and
interest rates. It's not worth anything. If you have your money in a bank account, it's not collecting any interest. There's no other ways to earn money. The only way to
right.
earn money right now is if you have your money in the stock market. It's like,
Exactly. And so now think about this. They raise interest rates, the market starts to settle a little bit, and a bunch of people that have been trading start going back to work. And a bunch of those people say, well, you know what? I made a ton of money. Now I can get like 4%, 5% on this CD. You know what?
right.
Pull my money out of the market and throw it in a CD for 5 years. And now
You're
that
reading
money's
my
out of the
mind
market.
because that's exactly what I'm thinking. As soon as that
Cash
happens, as soon as interest rates go up and if I could get 3% again on a CD, you bet your ass that I'm putting my money in a 13-month CD
flow.
and collecting interest.
Yep.
Absolutely. I'm spreading it across a couple CDs. I mean, because that's what I did over the last several years. And it's
Mhm.
funny because back in June, I had two different CDs maturing
Yep.
and they had collected, I want to say 3%, right around
Yep. 3%.
3% or maybe even more, 3.5, something in that range. It was like a 13-month CD. And I went to renew it and I thought to myself, well, wait a second, this is June. We're coming off of the worst financial pandemic, economical crisis of our generation. There's no way there's any interest rates. I know there's no interest rates because you look at the treasury bonds and all that crap. I look at, dude, do you know what the numbers were? Like, do you have a
I'm
sense of
assuming they
how
were
small they were? You're talking
were
about
they
fractions of a
L1?
percent, like 0.05%. It was like mind-boggling. I was like, absolutely no way am I keeping any money in a CD. I would rather just collect interest in a savings account. I mean, it's just not worth your time.
And
And
that's
it's
where
locked
I'm at.
up.
I have a credit union money market savings is like 0.6%. I'll take that. I'm not going to put it in a CD right now.
Yeah.
It's a
Geez.
fraction
Yeah.
of a percent.
That's not bad. Yeah.
Well, it's a credit union, so it's a little, a little bit better interest rates, but still, I mean, overall point, um, this is just like that is going to happen. That's going to suck money out of the market. All of
Big
these little intricacies are going to change things. You're going to get to a point where people who have, oh, I put 100K in and I came out with 500K are just going to be like, dude, I'm just like, I'm done. Like, I'm never trading again. And that money's going to come out of the market. It's going to happen. It may take one of those people who turned 100 into 500, losing 200 to go, all right, I'm walking away while I'm up. But we're
Yeah.
going to have that happen. And it's inevitable. It is inevitable that this market comes to a halt. Now, here's where I really, really wonder about things, because I do want to get back to it a little bit. You and I talked about GameStop, AMC, what that did to the market, where you could literally see the market was dropping as those were going berserk. And
It was fascinating to watch. You saw
product.
value names lose momentum, or you saw money flow going out of the highest value names in the market.
Yep.
Amazon, Google, Facebook, Apple. Yeah, you saw those sink, and that money went directly into that stuff.
Exactly. And so that happened, and it was like, to me, that was a very surreal moment, because what I saw going on in reality, in retrospect, looking at that, was and you can just decipher this from the action. Even investors who probably have been here a while know that this is just a fad and it's crazy and it's been lasting a long time. Even they were like, screw it. I'm going to go buy this garbage and trade it real quick because it's going to go up 100%.
Yeah.
And you talked about it. Sundial, billions of dollars going in. AMC, same thing. GameStop, same thing. I mean, like, everybody lost their mind for a month. And then you had people being like, oh, this isn't fair. They're halting the stock. And I'm like, They've been halting stocks for 12, for 20 years. Like, this is nothing new. Yes, it's pretty messed up, but like at the same time,
The way they did it was
messed up.
it was slimy.
The
But yeah, I mean,
brokerages moves were slimy. So
slimy,
like
very
they
slimy.
were, but the SEC halts were like, this is, I've seen this a million times, and
Right. Yeah. I mean, anybody new in the
but the
market that
brokerages were
trips you out your
saying
first couple
that was
times.
slimy. The brokerages saying you can't trade this was like, they had no right to do.
Inexcusable. There needs to be action on that. I mean, you can't. I'll never be able to justify that pulling that kind of crap when that stuff just bothers
It's
me.
already
That bothers
already
me.
tough enough with the halts in the market, then to just for brokerages to make a decision like that, you know. And
I'll
I did
say though,
early rumblings that the SEC was going to investigate them. I don't know if they'll follow through, but I sure hope they do. I know there were trials today on GameStop, and
I saw that, yeah, and Reddit.
guy. I like the company.
Yeah, that guy's hilarious.
Oh, man.
No, I mean, it's a brutal wake up call for a lot of the new money. People that have been trading over the last year, and all they know is the quote unquote the easy money, the bubble, the euphoric, the greed driven market that's just up, 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 buy the dip, up, 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 buy the dip. People like that get humbled. Eventually, the market always wins. It's like a law of physics. It's like a law of thermodynamics. It's just the law of the stock market.
It's so true. And while I may take profit early too many times, almost every time, that's why I can survive the market, and I'll continue to practice that. Even if it means I miss out on the ice cream on top of the cone, I'm happy to just get the cone over and over again.
This is everything I preach, and that's why I love you, Pete, because Pete is on the same wavelength as what I'm on. It's like, yes, sometimes it sucks when a stock is up and then you take your profit and it goes further. But you will never see me complain about making money. I'll never complain about making money. If I sell a stock and it goes higher without me, I mean, a profit is a profit. The saying goes, no one's ever gone broke taking a profit. And guess what? It's true.
I can't stand the saying, oh, you sold too soon. No, you made money. You sold at the right time. You were happy. That's the key. In addition, Matt, one of the things I always tell people is it's very rare that you're going to nail the bottom or nail the top. So stop trying to do it, you know?
It's almost impossible. And it's impossible to expect it. If you're setting your expectation to have a perfect entry and a perfect exit, you're not going to have success trading because you're always going to be looking for something that is impossible to do.
Yep.
Maybe once a year
happens to people. Great trade, they exit, they get FOMO because it goes higher, they buy, they give back a bunch of gains. I never should have bought back in.
Yep.
Here's a classic example. Recently, I had been loading into ACB calls on every dip in that ascending triangle setup under 12. And then, you know, I knew all along that it was going to make a move up into the mid to upper teens. That was my hypothesis with it. It does it. I ended up taking all my profit between $15 and $17. Okay. Very happy with that. The next day it runs to 23. Okay.
Yeah. I mean, same deal with Tilray for me. Same exact.
Yeah. And you do that all day because the reality is, when did that strike with me? It was 4 years ago. I made a spreadsheet, and what I started to do was I started to list all of the trades that I held, and I would list where I thought I should have sold, but then, you know, where FOMO kind of got me. And there was a tally at the end that would say percentage given back. Okay. And that percentage given back tab over a few months was like thousands of percent given back. And it started hitting me like every 10th trade. Yeah, it goes and keeps going. Great. The other 9, I'm giving back 10, 15, 10. You know, what am I doing? Why am I holding for the 9th trade that goes up another 20% when I could be locking these in? And then
my question real quick, were you using the same size, or were you scaling back your size as it would go higher?
Well, that's exactly what triggered me into the idea of scaling out half as soon as it makes its first move. And actually, to be honest, what that kind of allowed me to do was have a little bit more patience and a little bit more resolve. Say when a stock has a little bit of a harder pullback, but I'm very comfortable with the bullish pattern. And so then instead of being like, geez, I was up $5,000 and now I'm only up 2, I'm like, all right, I'm still up 3.5 because I only have half position, and I knew it might come here, and I'm not emotional about it now. And then it allowed me to ride up the further plays. So I found that taught me to scale to reduce emotions so that I could see the picture clear. When you hold a full size and you're up 20% and then you give back 10, that's very difficult, you know? It makes it really hard to kind of go, geez, like, am I going to go back to red? I'm feeling really shaky now, and I've lost confidence in the play.
Exactly why I say we operate on a very similar wavelength. You used ACB as your example. My example would be Tilray.
Yep.
The same kind of setup, that ascending wedge into that multi-year reversal inflection point, right?
Yep.
It's a gorgeous setup. It was an A+ type of setup. My average somewhere in that 11 to $10 to $12 range, somewhere in there. I'm taking the majority of my profit off by the time it hits 16, 17 bucks, right?
Yeah.
And then, it blows off a little bit into the 20s. I miss out on the perfect exit. Okay, that's fine. I still made money. But then what happens? You get a week or 2 weeks where it gets a tight consolidation so you get the huge run up, and then you get a little pullback, a little consolidation. What's it doing? It's setting back up for the next move. What do? Keep in mind, there's already cushion, so I've already profited some. It's not like I'm going back in the same type of size that I had before, but you bet your bottom dollar that if it's still playing out according to my thesis, according to the macro trend, I'm going to rejoin it. And I mean, that's exactly what I did. And it's not like my average is still at $11 or $10 or whatever it was. My average is now higher, but it's a new trade. It's literally a new trade at this point, but it's still in line with trusting the overall thesis and the overall chart. I mean, but that's the beauty of trading. You don't need the perfect exit. You don't need the perfect entry. All you need to do is recognize a pattern, have a little bit of conviction behind your thesis, behind the trade idea, and then let it play out. And if it doesn't work out, you better have risk in mind. You better have your stop out.
It's spot on. And this is the difference between the marathon and the sprint. Looking for consistency and having confidence in yourself that you can look like, you know what, if I sell TLRY for 60% gain and it goes up 800%, I'm okay with that because I know I can make a bunch more 60% trades versus, oh, I missed out on my one chance, right?
Yep.
And so we have kind of entered.
There's always going to be more opportunity. It's not like that's the last opportunity that the market's ever going to have. Hopefully you're learning from it. And just because you minimize that trade doesn't mean you need to minimize the next trade. You learn from it.
Exactly. And this is where I so I'm sure you saw it, but the GameStop run up, you see these people who are like, oh, like still have these shares from $5 and they're showing a screenshot and it's 300 and it's 400 and they're still holding. Well, look,
diamond hands. Like we're gonna hold it.
I'm sure they held it all the way back down too. I'm just saying.
You bet you.
That's the thing with all of this, or the guy who held AMC from 250 to 20 and back to 5. It's like, look, like if you hold a stock,
prove, like what is there to prove by missing out on taking 1,000% profit? What is there to prove? You're up 1,000%. Why are you not trimming? Why are you at the very least not taking your cost basis out? I'll never understand that.
I don't understand it. And here's the funny thing that I think about this. And I don't remember who was talking to about this. And I'm not going to name the name, even if I do remember, because I'm not trying to throw anyone under the bus. But the general quote was essentially this: the people who buy something and hold it while it goes up 500-600%, and it's just like erratic crap, right? Like there's no rhythm behind it besides it's just volume being fired at it.
Yeah.
I have no idea what they're doing. And good traders are never going to make that kind of a gain in a couple of day period because they know better. Like if the stock runs 200% in a day, they're not like, it's going to run 200% tomorrow too.
Yeah, right.
You know, you're like, it's going to pull back. And when it doesn't, you're like, geez, that's crazy. Congrats to anybody who had, you know, the crazy mindset to hold. But like, you can't be, I mean, maybe there's a few scenarios in which this works, but it's hard to imagine that you could be a good, well-rounded, thoughtful trader and hold something while it goes up, say, 700% in 2 sessions, right? I mean,
Yeah.
how are you not selling some when it does that? That's just wild.
I don't know, because if I was up 700% a day, I probably wouldn't be up 700% a day, because I sold it.
Same here.
There's no way I could hold something for 700%.
I mean,
At least full position. You know, there's times where I might have a swing trade in an options contract or something that might get up in the 500 to 1,000% range, but I don't have the same size as what I originally had. You know, if I have 150 contracts at, let's just say, $1, $2, by the time it's at $5, you know, I'm probably down to 50 or 60 contracts or something. You know,
and that's like exactly what I, you know, if I'm riding something and I'm up 200% on it, I'm down to a quarter or less of my position.
yeah.
Most recently, I was like, this little stock I bought at 12 cents, SIRC, okay? I bought it at 12 cents, little solar stock. I bought
I knew the stock. That's the second place in my competition was SIRC.
okay, so I bought 100,000 shares of that at 12 cents, just like, this is like solar's going to heat up. That thing moved to 30, I took off 50. I was like, wow, I couldn't even believe it moved, because it bounced really hard after it hit 20 after the grind up. And then I'm like, all right, well, this is crazy. I'll ride it one more day and I'll sell if it drops. Well, then it freaking goes to $1, and I'm like, I'm out almost all of this, but I kept 5,000 shares just for fun. And then it goes to 250. I'm like, this thing is insane. I mean,
Oh, actually, the high was 3. So yeah.
yeah, and I'm thinking, and I'm sure there's somebody out there who bought like 500,000 shares and held it for 250, but that will never be me. I'd rather just consistently make gains and do it again tomorrow and the next day. It's not normal.
There's a term for it. There's a style of player in poker, and I'm blanking on the name of the style of player, but essentially it's someone who they're not going to take high risks. They're not going to have gigantic zip code changing type of payouts every day or every night or every week, but they're consistent enough, and they stick to their strategy in a way that it just works, and it's scalable over time, and it is replicable over time. It just works, and that's exactly what Pete does. That's exactly what I'm doing. It's a strategy that I know works, and I might not make the most money in the world. I'm getting better, and I'm certainly, when I have a 5-star setup or an A+ setup, of course, that's when I aim for the fence. But on a typical day trade or like a B type of setup, or even like an A- setup, I'm not aiming I'm not aiming for a home run the same way that I'm doing on that A+ setup. It's just not the way I approach. That's just not my approach.
100%. And the people that are in your room and service, the people that work with me, they're with you, they're with me because they want to learn to trade, and they want to be consistent, and they want to be able to do this without having to listen to somebody else telling them what to buy. And that in itself says that you're in it for the long run. You want to be doing this for the next 20, 30, 40 years, however long you're alive. You want to be able to trade. And once you retire, you want to be able to do it on the side for extra income. So if that's the goal, which, anybody who's in one of our groups trying to learn how to trade the right way, then you're doing it the right way. It's the marathon, because what's going to happen is when the market does sort of pull back and then stabilize and not be as crazy,
well, there's ebbs and flows in the market.
Exactly. The people that are learning are going to go, okay, I know what to do. The people who are just literally looking for the sprint, let me turn my 10,000 into 50,000 tomorrow. I mean, those people are going to be lost. They're going to be like, where should I put all my money? Tell me where to put my money. What's going to run? And I've seen it, man. I mean, people are like bored with 20 and 30% gains. They want 100%. I mean, we have entered the realm of just
Yeah.
ludicrous.
It's our innate human psychology, brother. It's innate within our species. We're greedy creatures. We want immediate gratification. We want that quick payout. People want shortcuts. People want to take the easy way in, take the easy way out, and that's why. I mean, again, I
I
won't
think
even go there.
in
But
this market, 2 days, like 2, 3 days sitting in a nice swing setup that's beautiful, and it's gonna break out. It's just a matter of time. 2, 3 days is like too long for the average person. I
yeah,
mean, I'm accustomed to waiting 2, 3 weeks for the setup to work out while I build
yeah,
into a position, and then the breakout is even that much better. But in this market, it's like people may ruin a good setup because if it doesn't go after 2 days, they're just like, screw this, and they dump it. And that blows my mind. you
yeah.
know, it's just no pain. I
The,
need to liquidate this to chase that.
the new market, brother. It's the new market, and there's, like we've been talking about, there's a lot of good with the new market because obviously we like making money. We like the money flow. We like the sector rotation. We like having all the stuff pop up on scan. But the other side of that is, I mean, where do you even start? Like there's so many new people just chasing stuff blindly. The
Yeah.
strategy, there's a lot of people they don't have strategy. They're just looking for the quick pump and to make their buck. And unfortunately, a lot of those people are going to end up holding a lot of bags, and that's unfortunately nature of the beast, and that's how you learn sometimes. I mean, that's the best way to learn sometimes.
That
Is
it
just
needs to
belly up.
happen, unfortunately. That some of that money needs to be recouped but to the market, and it's necessary. So it will happen.
Wins. That's the take home message here, guys. The stock market always wins. You
It
need
does.
to have respect for the stock market, but at the end of the day, the stock market doesn't care about you. It doesn't respect you. It doesn't know you exist. You're just a set of data within a gigantic time series of other data, and
Right.
your data is more or less irrelevant. No one really cares if you're made money or you're losing money. But the market just always wins, and you better respect the market. That's what I know for damn sure.
It'll take it away in a blink. So with all that said, what, like, in your mind right now, right? We head into March. I see up here significant drop in COVID cases. Okay, huge. Like we're under 1,000 a day. 3 weeks ago we were over 5,000. Our vaccine rollout here in Massachusetts has been kind of poor, subpar, but it's starting to move along. What I've seen on the overall numbers is, what are we, north of 60 million now vaccinated, I believe?
Is it up to that many? Holy cow! I
And
did
just
not pay
over.
close enough attention to the numbers, to be perfectly honest with you.
So Bloomberg dropped a little article last week, and what they said was,
That's mind-boggling. I did not know we were already up there.
yeah, we're doing well. We've been increasing it quickly, and Bloomberg dropped a message last week, and what they had basically said was, there's 30 whatever million plus confirmed cases of COVID in the United States, but based on like some of the data they put together, there's closer to 90 million cases that are suspected, but pretty much yes, there's that many. And what that data takes into consideration is asymptomatic people, or like, hey, I caught COVID, I came home, I have a family of 4, I got tested, the rest of my family didn't get tested, we were all sick, we stayed home. Like, it takes stuff like that into consideration. So
Yeah,
they're not getting tested because they know they have it. There's no reason for them to go out and expose other people to it, and
yeah,
therefore they never get collected as the data. So what we're kind of looking at, Matt, is realistically, yes, those people, they're being encouraged to get vaccinated, but we're realistically looking at a good amount of people who are now vaccinated, a good amount of people who have now caught it. Population in the United States is what, 360 million or so, I believe.
yeah.
There's somewhere around that, and so we're getting to the halfway point. So with all that said, I just want to be optimistic. I can't stand when people say if COVID ends. Look, it's going to
Yeah.
end. if they could get over the Spanish flu in 1918, 1919, we'll get through this with better science. Trust me.
That's a great way to look at it. I've never looked at it from that perspective. That's a really good way to look at it. Yeah.
Spanish flu, very similar sickness. Whether it was a flu or not, people's lungs would fill with fluid. In cases, then people would die within 48 hours. They would turn blue. They would not be able to breathe. Actually, more deadly the second wave than COVID's been.
Yeah.
However, my overall point is, to me, I'm optimistic. I do feel like things are going to be better next month, and I feel like April, it's going to be very different. And as we get into spring, I think there's going to be a lot of positivity out there. With all that said, I see it, I do too, and I'm going to knock on wood. But with all of that said, if that transpires, and say we're getting into summer, this is something I've been thinking about. I'm curious your thought. What do you see happening with the market? Summer is notoriously a time where volume kind of falls off a cliff. I could see it really dying because I could see people just kind of being like, I'm taking a beach vacation with my family. I'm seeing friends. Like, I don't want to think about anything. I could see like the market almost, instead of having a crash, so to speak, or a pullback, I could see the market almost becoming incredibly stagnant for a number.
I mean, that would be the best thing in the world if we just had a couple months of just sideways, like a nice sideways channel, or maybe even like a flag, you know, multi-month flag. Like, okay, put it this way, Pete. If you look at like Amazon's daily chart over the last like 3-4 months, if we could do that with like the broad market, oh my God,
for like 2 years,
that would be gnarly.
Then we don't need to have a recession, right? Then we don't need to pull back.
Yeah, and so, honestly, yeah, I'm totally on board with that hypothesis. It's like I know for damn sure, come April, May, I'm going on a vacation. I would love to take a vacation, especially this summer when things are opening back up. Yeah, I mean, I don't want to be spending all my time on the market, and I think that's kind of the catch-22 with the trading being as lucrative as it's been, and COVID making a lot of people's situation not so ideal for the last year. Well, then it kind of will flip a little bit come spring and summer. All of a sudden, trading goes back down to kind of not. I don't think we'll ever go back to pre-COVID levels in terms of the market and liquidity and all that stuff. But I certainly do expect it to decrease a bit. Again, some of the white collar type of jobs, they'll go back to offices. People will go back out, and life should return back to normal a little bit.
Yeah,
and I think like we were talking about, like the Fed, you know, easing off of printing money. I mean, there's a lot of reasons. And I think it'll be good for the long term. It'll be good for the market. It'll be good for us to get outside and not worry about the stock market for a little bit.
Well, that's an interesting thing you bring up about, you know, wanting to go on vacation. One of the things that I've you know, just outside of the market had a little bit of just like a mental, not like no depression or seasonal depression or anything like that, but it's just hit me more recently. You know, the last 2 months here are months that usually maybe my wife and I have a vacation plan, or we're going to go up to Vermont and get a ski house. Well, we're not even allowed to go do that without a COVID test and quarantining, so we didn't do that. Or, you know, we'll go to a Celtics game, go out to a show, a concert with friends. You haven't been able to do any of that. And basically the last 2 months of my life have pretty much been wake up, get on the computer, trade all day, research all day, take a break in the middle of the day, walk the dog on the same trails, come home, and it's just like, it's like 60 days of this just about straight and nothing else. And like, man, I would like, to be honest, I would like nothing more than to just close out all my positions, walk away from the market for 1 or 2 weeks, not even look at it. But you know what? There is nothing else to do.
I'm pretty much on board. I mean, shoot, we don't have it that bad in Texas in the wintertime. I will say up until the last week, it is an absolute catastrophic cluster F, you know what, down here. But I mean, winter here is totally different. Most days in the 60s or 70s, I can actually go outside and do stuff. But it's interesting. I've gotten a taste of winter the last week, and I don't miss it at all. I'm from the East Coast. I don't miss winter at all. especially when your city's not prepared to handle the situation.
I know.
Yeah,
Yeah.
I totally agree with you. I'm ready to take a vacation, close out positions, and
But if
it's
you did it
good.
right now, you would lose your mind. You're right.
Yeah.
What are you gonna do? I mean, I'm sure there's some good stuff going on down in Austin, but I mean,
No, you're absolutely right though. It's like, well, and there's a FOMO aspect, like you feel like you don't want to miss out on something.
but if you're
It's
sipping Mai Tais on a beach in Hawaii, you won't feel like you're missing out on anything.
yeah,
That's
100%.
a little
Yeah,
different.
I mean, I'm ready for that too. I'll tell you, that's the first thing I'm doing as soon as the opportunity presents itself. I'm ready for it. It's just good for the mind. It's good to take it
Oh,
off. And, I mean,
100%.
you burn yourself out in anything, whether it's actual work, like a real job, or the stock market. You're going to burn yourself out, and that's
Oh,
something I've always
no matter how much you love something, too much of it will eventually be like, man,
yeah,
give me a break here, you know. And so I love trading stocks, and I'm very happy, and I feel very grateful that I can teach others to do it. And COVID in a sense, made me have to leave my day job, which used to use to supplement trading, and then turn like an educational service into my day job. And I'm super grateful for that because I like it more than anything I've ever done. So I'm certainly not trying to complain about it. But all I
yeah,
mean is, you do anything for just a year straight, which is, we're going on a year straight now since this madness has begun, just
yeah,
about in March. I mean, I haven't taken a break from the market, and I usually do. I just haven't really been able to bring myself to do it because there's been not much reason to.
yeah.
So I just love the opportunity to go get away from it for a bit. And so I'm really hopeful that we can push past COVID. That said, I think a lot of people are in this mindset, and I do
100%.
see that to being even bigger
That's
reasoning
what's
why.
going to slow the market down. I'm totally on board with it. I think that's what slows the market down and eases up some of the madness. Again, that'll also help be able to take the vacation and relax for a little bit. And then
Yeah.
next fall and winter, maybe we'll do it all again. Who knows?
Oh, I hope not. I'll be down there with you guys then if that's the
Yeah,
case.
I mean, shoot, we got our doors open down here. We're ready. We're ready for your company.
Matt,
Yeah,
one more thing I want to ask you about, and obviously let you go enjoy the rest of your night after this. It's been awesome chatting with you. I hope we can do it again someday.
oh, 100%.
One last thing I want to ask you is, looking at a bunch of like these EV charts, NIO, Tesla, a lot of them are starting to pull back quite a bit. Tesla may be sort of forming a downward wedge or flag, honestly, but NIO almost looks like it could fall off a cliff soon. Do you think that we're going to see a big, like, kind of EV mess soon, which is going to be more panic driven, that eventually gets gobbled up? But I'm looking at these charts and I'm thinking to myself, this EV movement may just be about to fall off a cliff to an extent. Do you see that happening or no?
Yeah, I think, well, yes. I mean, in short answer is yes. The long answer, which I'll still shorten, is kind of one of two things. I think normally a lot of the times when you have a bubble, when you have a euphoric run up, that greed driven run up, something like Tesla or PLUG or NIO, that we'll just use the green energy, green renewable sector as a whole. Sometimes the catalyst that sparks that pullback is something like a very big negative piece about the sector. So maybe, and again, this is pure speculation. This might not even happen. But let's say that Joe Biden or China or someone comes out with some kind of big news piece about why green energy, something, something, electric vehicles, something, something won't work for the next 5, 10, 15 years. Something like that. You know what I mean? Some kind of catalyst that like puts off everything that we've been buying the hype into for like the next couple of years. You know what I mean? Something like that could slow it down, and then that would be a good reason. That would be a very solid reason to start that. I don't want to call it a waterfall or a cascade, but certainly the start to that correction period.
Yeah, you're right. And it could be temporary, just like we
Yeah,
saw with marijuana last week. Like, look, folks, all they did was delay the bill to June. Like, you're going to sell stuff off like it's the end of the earth now?
Yeah.
it's still going to happen. It's just people can't,
Right.
oh, 6 months. I can't do that, or 4 months, whatever it
But
is. Like
hey,
they
I mean,
lose their.
dude, at the end of the day, what it does is it creates another opportunity down the road. And that's,
Yeah.
I think that's kind of the theory that I personally buy into. Something like that comes out within that sector. So like you just said, like a bill being delayed, something like that, where instead of a 1 or 2 year horizon that we can buy this bubble into, it turns into a 5 year horizon, right? So it
Well,
just
right
kind of
now they're
delays.
hypothesizing 2050. Imagine if
Yeah,
2050 gets pushed back to 2075. That
right.
you're right. That could be like the like screw this.
Yeah,
I'm gonna.
like why am I buying all this crap into something that I'm not even gonna make a profit on for 20, 30 years?
Yeah.
Something like that. And then the other side of it it could just be a slow type of bleed out correction over the next 6 months or a year. But the reality is that stocks like Tesla, NEO, PLUG, a lot. And I'm just naming a couple
And
prime.
there's a lot more, but I hear you.
There's one or two more. Um, they need to digest, and it needs to be
Yes.
a very prolonged period of digestion. If you look
Yeah.
at Tesla's chart, Tesla initially ran up, and if we're taking into account pre-split
Pre-split.
prices,
Jeez.
yeah,
I haven't even calculated that. What times 5, right?
yeah.
So
I mean, you're talking about pre-split prices. It ran from $7, $8 up to 45, $50. Okay. It then took the course of 5 years to digest that move. And here, I could just pull it up on screen just to, I mean, it looks a little bit better.
yep.
But what I'm representing here, let's do weekly time frame. So something like this, you get this huge move. Let me zoom in a little bit, just make it look better. Huge move. $8, $8, you get up to 50, $55, right? That timeline of that occurring is over the course of a year. Keep in mind, these are weekly time frames. Okay, so you get up to this area, and then what happens? You digest that move over the course of 4 to 5 years, and now we have this gigantic move. I mean, you take it from the breakout level, let's call it 75, $80 up to where we are. We've now made another 1,000% move. We're super extended off the 50 SMA. Look at how extended we were off the 50 SMA here. Look at how extended we are off of here. It just needs to digest. It doesn't necessarily have to pull back 40 or 50 or 60 or 80% or anything like that. But
This
it
might
just
be sideways for 8
we
years.
just need sideways. We desperately need sideways. This isn't sustainable. I mean, it's not healthy. I think it's fun. It's fun for everybody, but the most sustainable, the most healthy thing would be something like this over the
Yeah.
next year, over the next 2 years. You start channeling sideways, similar to what we did right here, right? That's what I want to see happen. And
I
that's what
agree.
I think
That's basically our hope of what can happen in the market too.
yeah,
Instead of it holding,
100%.
go sideways
100%.
for a year, and just we'll
It's
still be
just
able to trade in that pattern too.
the risk to reward level up here is just, well, it's funny
Yeah.
we're talking about that because I was actually outlining today Tesla. Well, shoot, you go back the last year, pretty much every time it starts hugging against the 50-day,
I know. I
9 times
said
out
it
of 10,
today.
it has a nice balance. So it's a critical level if you
I
think about
know.
it. But just
It
talking
is.
about
And that's
what's that, dude? I'm gonna go back. Yeah, but
if it goes down here, we could have a big drop. But if it bounces off this, it could go up to 1,200 again. The
yeah,
post fall.
yeah. Which
Hey, can you hear me?
wouldn't. Yeah, I
Sorry.
got you. You got me.
We could go to post split 1,200.
It's totally
Yeah.
possible.
Yes.
There's
Can you hear me?
no rush to jump in and think one way or the other. My
No,
gut
I don't
feeling,
want.
the most ideal scenario is a prolonged period of sideways. That's just the best thing for it, in my
I agree.
opinion.
I agree. And now I lied. One more question for you. Bitcoin about to burst, or is it going to 100K?
I could see it getting to 70, 80,000 before I see it getting back to 30,000. Let's put it that way.
I
Maybe
was thinking
100.
high 60 or low 60, but same token, something that's throwing me off just now, and there's two sides to it. One, I know institutions are in this time, that makes a big difference.
It
But the
does.
other side of the coin is like when we kind of came back up just recently and broke 50K, that's typically a time that we see like extreme excitement flow into Bitcoin and it erupts. And it's just
Yeah.
kind of like slowly grinding there.
You're
That got me
talking about like the big psychological level, creating like a bit of follow through.
like where people freak out and buy. We're not seeing that, which, okay, for one thing, that's good because if you get too much too fast, you get a hard sell off. So the grind up's good. But I am wondering if you got people looking at Bitcoin now at 50K and saying, well, even if they're right and it goes to 100K, do I really want to invest, 50K for 100%? Like, and I keep going back to looking at Ethereum now. And I see Ethereum has the same setup as Bitcoin, but then when it broke its highs, it broke those 1,400 highs where Bitcoin hit 20,000 and it only got up to 19. Like, I think Ethereum could have like a 4x move if Bitcoin keeps going. So I feel like more people are going to flood into that if Bitcoin keeps going. But that said, I finally let go of a bunch of my Bitcoin up here that I've been holding for a long time, and I'm just like uncomfortable with the current level. But
Yeah,
everybody says it's not going there.
the way I played it recently was like I bought a bunch off that pullback several weeks back.
When it
And
went to 28, 29.
yeah,
Yep.
around 30, 31,000. And I sold most of those on that candle the other day when it first got above 40. I made
Yeah.
my 30, 35%. And that was kind of the trade for me. It was it was a great trade, to be perfectly honest. It was an awesome trade, good way to start the year with something like Bitcoin. Um, the way I look at Bitcoin is like when you're comparing it to like the 2016, 2017 run up,
Yeah.
is that, and this is how I think it plays out over the next year. And I don't feel like switching my screen, so we'll
I
just,
know. Yeah, we lost it.
there's the Bitcoin chart right there. Can you see it? But
Yep.
over the course of 2017 and stuff, you have the run up, the macro trend is up, but what you have is you have little blow offs in between. So you have little run ups and then pullbacks, a little digestion, and then runs up, pulls back. And that just kind of rides up, 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 up. And that's kind of what we're seeing with this. We had that big time inflection break around 13, 15,000. And
Yep.
now all of a sudden we grind up, hit 20,000, pull back a little bit, grind up, grind up, grind out. We hit 42,000, pull back a little bit. Now we're grinding up, grinding up, grinding up. Maybe we pull back down to 40,000, 45,000, something like that. And then it
Yeah.
continues that little grind up. But yeah, I mean, put it this way, brother. Bitcoin is phenomenal. The setup is constructive. I love it. But
Me.
it's not something that I'm buying into the breakouts. I'm buying on dips. As long as it's riding along the trend, I'm playing it on dips. So if you're asking me how I'm personally playing it right now, I don't have a position. I'm waiting for it to pull back and try to scale back
Yeah.
into it.
And I'm fully out at this point. I'm just like I'm just looking at it and I'm like, I know it can go rocket mode from here, but like frankly, I'm just like I'm happy. I'm happy
Right.
with what it did, and I'm
Yeah.
just gonna like if it does do a dip like that, I'll as long as it holds those that previous breakout level, hey,
Yeah.
I'll buy back in and trade it again. But
Yeah,
at this
I
point,
have bids in. I've got bids in, and if I catch them, I catch them. If I don't, whatever. My life goes
yeah,
on.
I've exited the idea of like everybody else that just kind of wants this thing to go to the moon. I mean, I hope
Yeah.
it does. I hope it goes for them, but I don't know. There's just so many things that feel like they're ready to burst. I wonder if they all just kind of go at once and it's all a product of each other. So we'll
Hey,
see.
I mean, look, that's the market we're trading in, but I don't know, we're patient, and that's why I love you, dude. You're on the same wavelength. You're a good guy, and
Right on. I appreciate it. You too.
I appreciate you coming out and talking a little bit. This was fun. We definitely 100% have to schedule something like this again.
Yeah.
I don't know, maybe we can make it like a once a quarter type of thing. We hop on, do our chat. And yeah, I hope your followers, my followers, everybody got a lot out of this. I had a blast doing it.
Yeah, man. Please, whenever you get it uploaded, just send me the link so I can send it over to my folks, and I'm sure they'll be very appreciative of this. So thank you, man. And maybe someday in the future we'll be doing this live somewhere, some venue, you know, when things get back to normal. That would be real fun.
Visualize it. That's what we could visualize. Visualize the live setting, and we do it in front of an
Human
audience.
interaction, my friend. We all need it.
I know we do. But yeah, that's we'll wrap it up on that note. I hope everybody enjoyed it. Any closing thoughts, Pete, my man?
Not many, unless if you're not following Matt on Twitter, you should be. You know, he doesn't tweet as much as he did one day, but he's one of the best out there. I've said that for a long time. And yeah, just man, keep up the good work, stay in touch, and thank you for doing this with me. It was a great time.
I appreciate you, man. I appreciate it. All right, guys. Hope everybody enjoyed. Peace and love, Pete. Love you, man. Hope you continue to crush it. All the best to you, dude.
All right, later, everybody.